Hi, this is Kerry Artek with Wicked Stocks, bringing you a long overdue update in the Mag 7. I've been moving around personally a lot, and so there's only so many hours in the day. But here we go. We're going to continue this on a weekly basis every single Monday or Sunday afternoon, Monday morning. This is, by the way, for the week of Monday, November 10th, 2025. I'm going to begin with Microsoft. We have been, a couple of weeks ago, pushed into, once again, this classic rising channel top. We have yet to close above this structure, and I really call this kind of a band of long-term resistance from 543.83 to 569.72. I'm not going to mention the decimal points because you're just watching this right now, so you know it's just too much for me to spit out. The top channel, 569.72, was actually tested in late July. And so this is a significant area of resistance, as I've been mentioning now for many weeks, able to contain buying possibly on an annual basis, which it has obviously performed so far for 2025. But what I mean by that is possibly well into 26 we can fall away. Our sell signal, if you didn't sell this rally here in this zone, our sell signal on weakness would be a settlement this week below 491.03. So there's your channel top that I've already shown the previous slide at 543.83. And it is 491.04 that I see as a significant pivot point through the rest of the year. With present volatility, if we were to close below 491.04 this week, we could, by the end of the year, possibly within 3 to 5 weeks, fall all the way back to 428.63. I've used these kind of full channel extensions as a targeting mechanism for many years, and they work quite well. So if we close below 491.04, 428.63 expected, I'm going to call with this inside of 2 months, and it could be with present volatility inside of 2 or 3 weeks. 428.63 also lines up very well. I don't have the exact number here, but it's in the upper 420s. I believe it's actually in the 428 handle. The 5/8 Fibonacci from this April low against the high that was put out in July. So there's a lot going on down here in terms of a target, and also in terms of just covering a short position you may establish below 491.04, and also actually going long as we move into the first quarter of next year. But all of that a moot point. Right now I'm going to call this a two-sided framework, buying 491.04, selling 543.83. If we close above 43.83, expect the retest of the 469.72. And yes, if we were to close in the weeks ahead above 469.72, we've got sort of this stratosphere move, continued gains. I don't even want to go there in terms of a target, but I will if we push into this zone in the coming weeks. Let's move on to Amazon. Amazon has been testing, well, actually last week, tested this meaningful channel top. This goes back to the August 24 low, so this is a year plus. This 253.69 formation in conjunction with 269.94, because you can't ignore this even longer term channel that stems back to the early 23 low. So this is like a 3-year structure come January, 269.94. I think if you're a near-term trader closing above 253.69, expect 269.94 within 1 to 3 weeks with present volatility. This 269.94 formation can contain buying through the first quarter, possibly well into 26. And yes, once again, if we close above it, we become increasingly high velocity and vertical to the upside. I don't have a good target, set up, but I will get busy with that if we were to actually approach this 269.94 in the coming weeks. I don't expect to see it unless we close this week above 253.69. There we go with the decimal, huh? Let's talk downside here with Amazon. And you've got the 253.69 formation that can contain buying, I'm going to say, into December, possibly through the rest of the year. Our downward pivot point now through the rest of the year is 238.49. And that can contain weekly selling pressures. If we do close below 238.49, we should, once again, with presently heightened volatility, this could be a 3 to 5 week sell-off. It could also take all the way into the end of the year before reaching this significant significant 208.97 to 217.06 region. This is a channel structure that goes back to the April low, so a full roughly 9-month channel bottom would be expected if we were to close this week below the low of the high of 238.49. This after testing this long-term resistance, I would expect by the end of the year, this 208.97 to 217.06 region, this rising channel bottom able to contain selling through the first quarter, and from here, within several months, we can round up to retest the 253.69 structure. Let's move on to Meta. Now, this is a structure that I had mapped out for us several weeks ago, and we did test this channel top. So if you can see, you've got a series of lows, a high, a low. Then we ran back to test this channel top. I'd mentioned that this would have been an upside breakout had we closed above it. As it turns out, it held. And in fact, not only did it hold, but we closed the very same week below the channel bottom, which is 661.59. So if I'm talking Meta right now through the rest of the year, you're selling 661.59 because this market looks weak. Once again, with present volatility, this could be 3 to 5 weeks. We could test 541.53. 541.53, a pretty solid classic channel bottom, able to contain selling through the first quarter. And from here, we could round up not only to 661.59, but actually continue higher in the 3 to 5 months ahead, perhaps, to channel resistance that is presently in the 830s and climbing. If, of course, we were to close below 541.53 in the next month or two, then we enter another near-term sell signal to even longer-term support at 424.39. And it is this structure well below the market I don't expect to see unless we close below 541.53, the 424.39 structure able to contain selling through all of 26, and from here we can round up again. But the way I would characterize Meta really through the rest of the year is you've got a ceiling of resistance at 661.59, able to contain buying into December, below which 541.53 I think is a realistic 3 to 5 week target given present volatility where we could bottom out through the first quarter. Now, if we do happen to close above 661.59, we have just really kind of a near-term buy signal to this channel top at 735.55. So we would have a bit of a reprieve for a week, 2 or 3 if we close above 661.59 and then test this newly formed descending channel top. Remember the last one, and I'll take us back to this chart, actually held before we then broke below it. So this 735.55 able to contain monthly buying pressures. We could fall away again from here, but it would be a settlement above 735.55 that would set up this convergence of these two long-term channel tops, presently around 862 and climbing. This could be 3 to 5 weeks with high volatility. This could also be 2 to 3 months with more normalized volatility, but closing above 735.55, the 862 region then climbing likely within 2 to 3 months or sooner, where we actually could place not only a quarterly high, but this is actually a 3-year structure, possibly through all of 26. We're not in that place right now. As I mentioned a moment ago, we are heavy near term below 661.59, anticipating 541.53 over the next 2 months or sooner. And let's move on to Alphabet. Excuse me. We came close a few weeks ago to testing this full channel extension I mapped out, 296.76 this week and climbing. This is a targeting mechanism, but is also an area where Alphabet could grow exhausted as we move into the first quarter. We could fall away from here, possibly back to kind of its sister formation at 225.98 within 3 to 5 months or sooner. Downside, 264.28, the low of the high that was put out several weeks ago, is our downward pivot point through the rest of the year. You can buy 264.28, anticipating then 296.76 within probably 3 to 5 weeks or so, and you could play a ping pong really between these 2 points. But if we close below 264.28, we've got a good high for the rest of the year, and over the following, possibly as quickly as 3 to 5 weeks, could take couple of months, 225.98. This former channel top well suited to contain selling through the first quarter of 26, and we can round up nicely from here. We could trade inside of this for a good part of 26. On to Apple. Now, I cover Apple every week as a paid subscription in wickedstocks.com. And so we go into great detail. And I'm not showing everything. I'm just going to show one chart. And that is the fact that a few weeks ago, we pushed inside the 1% zone of this 5-year channel top, where this market, Apple, can be sold. This is a long-term structure, 5-year structure. This can be sold through Q1 of 26, and we can fall away from here appreciably. In fact, channel support is in the upper 190s. And, we've been trading inside of this zone for 5 years. So there is a case to be made that holding below 280.40, we could find ourselves by the end of 26 or sooner in the upper 190s and climbing. Our next sell signal, and this is all I'm going to present for Apple, would be a close this week below 264.65, which is the low of the high. I'm not going to provide the target. I'm just going to tell you that after having tested long-term resistance at 280.40, closing this week below 264.65 is a sign of weakness. I can say that we've got a lot going on in the 230s as a target and as a support area, but that's all I'll say. I would just encourage you to go to wickedstocks.com and take advantage of our 5-day free trial. You'll be able to see everything that we present for Apple this week. And finally, with regard to Apple, if we were to close above 280.40 this week, that should be by a 1% margin. So I would just ask you to add 2.8 to this. That would be about 283.20 if I'm doing the math correct. 283.20 or higher, we enter this sort of new normal for Apple, which is to say that this rally from the April low continues as we move into 26. We could, and actually this would be our next long-term objective. There will be other levels mapped out, wave counts and so forth, but we are in uncharted territory as it is. But 280.40 is a classic channel top. If we close above it, this looks really strong as we move into 26. The 380.12 formation, then I would anticipate by the end of 26 or sooner. NVIDIA, we cover every single day for free on our Wicked Stocks YouTube channel. You probably already know that. We tagged this channel bottom last week. It was considered a 2 to 3 week objective about a week earlier. We saw this in a hurry. 183.42 can contain selling through the rest of the year, and from here, we're likely to round up to 219.64 over the next, I don't know, I'm going to call it 3 to 5 weeks or sooner. 219.64 is part of a range that we also have. We've got a lot going on in the upper 220s. I don't map that out here. But I will show that if we continue higher this week. You can see this, by the way, for free but just by going to the video that you have at your disposal. So all of this is mapped out to the upside. Now, downside, if we close below 183.42 with present volatility, 1 to 3 week sell signal down to 155.49, and this structure can absorb selling through the rest of the year and even through the first quarter. We can round up within 2 to 3 months, 3 to 5 months from 155.49 into the 219, 220 area, 228 area. We'll just call it 220 to 230. I'm rounding up on both counts. 220 to 230 in reach within 3 to 5 months of testing, 155.49. And finally, if we were to close in the weeks ahead below 155.49, then we enter another sell signal that should yield 117.80 within another 2 to 3 months. This structure able to contain selling through all of 26, but we're a long way from that right now. Tesla, same thing. You can watch our daily Tesla report for free on YouTube every single day. And we've entered a buy signal a couple of months ago above 365.11 that ultimately anticipates 527.33. I call this a 5 to 8 month target. We're a solid 2 months into it right now. The pivot point in between 365.11 and 527.33 is 514.77. So if we close below 514.77 within 3 to 5 weeks, I would expect 365.11. Holding above 414.77 will keep this 527.33 in reach over the next 2 to 3 months or sooner. And I would just have you watch that video to get the buy signals above. And finally, this is not part of the Mag 7, but is Palantir. I'm just updating you on this stock. We're pushing back above as I speak. The market just opened about 15 minutes ago above this 186.96 level. This is a bit of a pivot point near term. We did close below it last week. And I'm going to say, despite the fact that Monday morning early we're above this, if we close the week below 186.96, this stock remains on the defensive. This is your big support. 146.95 to 159.86, rising and narrowing gradually into the mid-170s by January. This is a base for Palantir. We can bottom out here not only into, but even through the first quarter. Round up again, we have a channel top. So if we test the channel bottom at 146, we can round up to the channel top that is presently at 224 and climbing. And as we go into, say, March, late March, early April, we're already in like the 280s here. So there's a scenario where we could bottom out in the 140s, 150s, and by March, actually be pushing into the 260s, 270s, 280s. That's all I'm going to say for Palantir today, and that's all I've got for this week's Mag 7. You have a great week.